Namaskar dosto. In today's video, we are going to review three companies. So these are three high growth companies. It's a mix of a mid cap, small cap, and a micro cap. So we'll start with the We'll start with the mid cap company first, right? So the market capitalization of this company is 45,000 crore. The name of the company is Indo-MIM. And this company, I like this company for a couple of reasons. But before I come to the reasons, I'll just give you a brief about the company. It manufactures precision engineering components. So I'll just attach a picture of what this company manufactures. So this company is it does not have any local or domestic competitor. Metal injection molding is what this company does. 7% market share. So it does not have any domestic or local competitors. It just has global competitors, right? So the reason I like this company is because it has very strong structural moats. So if you look at the technological barriers to entry, these are very high for this company, right? So it's reflective in the numbers as well. So if you look at the EBITDA margins, these are 25% and expanding. If you look at the ROE, ROC, ROIC, more than 25%. It's a free cash flow positive company. So technological barriers to entry. So whatever this company is manufacturing, it has certain technological superiority which others are not able to kind of catch up to. So it only has global competitors. So this is one very important thing. It has very strong structural moats. Competitive advantages are very solid for this company. So this is one thing. The second thing is that this company works for industries like aerospace, defense, medical devices, and there is a lot of stickiness and a very long approval process for securing new clients. So first of all, whatever clients that this company has, there is a lot of stickiness. So there is no churn that happens, especially with the clients which it already has. Plus, there is a very long approval process for securing new clients. So whatever the clients that it has already onboarded, they really do not want to churn this company or start working with others, because there is a very long approval process to get or kind of work with other kind of vendors, right? So this is very important thing. So structural barriers to entry plus a lot of stickiness with its clients. The third thing is that 50% of the top line for this company comes from exports to the United States. So the tariff story is behind us. The rupee has depreciated a lot, and the rupee will keep on depreciating for the next couple of years. So export oriented themes is what one needs to look at. Even if you look at the precision equipment space or precision engineering space, there are a lot of companies which have kind of rallied in the recent times. That's predominantly because exports, rupee has depreciated a lot. So US contributes 50% to the top line. It is scouting for other kind of markets in the European Union and Southeast Asia as well. But I think the tariff risk is behind us. That's why this company looks like a very solid company. It has very recently got listed. So even if you look at the stock price or if you look at the stock chart, there's not much to decipher, from the stock chart itself, right? So this was the first company. The next company that we discuss is Freshara Agro, right? So again, this is a microcap company. This company exports gherkins. So it's an export-driven company. Even the first company was mostly the export-driven company. Freshara Agro microcap is an export-driven company. It exports gherkins. Gherkins are nothing but cucumber. So in Hindi, we call it khira. Cucumber, I'll maybe, give you more understanding of what this company kind of exports, right? So it works on a farm to fork model. So it has a network of farmers from which it procures, cucumbers, packages them, and then exports them. It exports to around 40 countries, right? Again, being a microcap company, this company has an ROE, ROC of more than 20%. It's a decently sales growth company with not a lot of demand side cyclicality, because it exports to all these FMCG and food companies. So Freshara Agro is one company which you can study further. It looks like a good microcap. The third company is a small cap company, market capitalization of 7,000 crore. The name of this company is Piccadilly Agro. So this is an algo-bev company. Now, this is a very interesting company, right? 20% of the business, 20% of the top line is contributed from sugar manufacturing. So that is something which is getting demerged. So 80% of the top line currently is from alcohol and beverages, right? So 20%, some demerger is happening over there. So, the sugar business would be separated from the alcohol and beverage business, right? So the 80% business which I'm talking about is from the luxury segment. So this company is very famous for two brands, Chamkira and Indri. And it's luxury, it's prestige and above तो एक होता है, but you know prestige and above के ऊपर भी एक segment होता है, luxury segment. That is where you know this company is gaining a lot of footprint. And you know if you look at the forward guidance that the management has given, it's like 60 to 70% top line, EBITDA of 22%, current EBITDA is around 18%. So the stock has not gone much in the last 1 year, but I think once this company starts working, I mean it has already given decent profitabilities in the last couple of years. But I think the premium, if you want to invest in the alco bev industry or alco bev companies, premiumization is the theme which you need to look at. The metric which you need to look at is what is prestige and above contributing to the top line. So for example, in the case of Radico Khaitan, it's 76%. In the case of USL, it's more than 90%. So one needs to look at what is the contribution of prestige and above to the top line. So if you want to invest for a longer time in alco bev companies, so premiumization is the theme which you need to back on. And if you want to invest for shorter time in alco bev companies, then country liquor brands are cyclical in nature. You have companies like GM Breweries and Global Spirits. Those are the companies which you need to explore. But structural growth is what you will get in company like Piccadilly Agro, right? So exports are very, very strong. One of the great things about this company is 70% exports is what it is expecting, right? Single malt whiskey, single malt scotch is what it exports a lot. As I told, its demerger with the sugar business is under process right now, and a lot of aged inventory is coming online. So that's why the management is expecting a lot of growth in the next 1 to 2 years, right? So this was a brief about all these companies. If you like the video, please give me a simple like. Thank you very much for your time. Take care. Bye-bye.